You were snoring. What are you talking about? Somebody else was on here. No, you were snoring. No, because it showed you how many people trying to get in. They're trying to get into the room. So look, admit. No, let me take out that because.
You guys can hear me?
Yo.
You guys can hear me? Here it is. You guys can hear me?
Yeah, I hear you.
We back. Yeah. All right. Siobhan, you can hear me? Back to the chart. You can see the chart, Joe?
Yeah, I see it.
All right. Let's see if this thing is like, hold on one second. All right. Siobhan, you back? You can hear me?
Yeah.
All right. So remember what I was saying on the last, before the other one cut out, is that I was going to show you guys how you can take buys if you're looking for sales. So basically, let's go to the 5-hour chart and I'll show you guys one example and you can just reference it when you come back and watch the video. Hold on one second. So on this example, right? Remember, it's actually if you're looking for three, you're gonna take sales because you saw 3 lower highs. So if you saw a green black pattern here, then you saw a green black pattern here, and then you saw a green black pattern here, and actually, right? So you know that price is technically always going to retest. Remember I was telling you guys, typically before the big move happens, it's going to be a retest, right? So because you had basically, for sales, you had green, black, green, black, green, black. That's 3. Even if price is going to drop, they're typically always going to do a retest first. So on this particular trade, which was off 137, you know that there's going to be some kind of price action off 137 that attempts to go higher before they drop it. And that's only to basically get more liquidity before they drop the price. So once that three lower high pattern formed, right? 3 lower highs, 1, 2, 3, right? Because you got a black and then a green. You could take buys typically off 137. It's going to retest one more time, 137, 500. They call that a last touch. Notice how price tried to fake people out one last time because they put let's put a green candle in here. Off 137, you could have picked up about 450 pips and then price collapse. So if you go through the chart, you're going to start seeing when you see the three lower high pattern for sales, it's going to give you an opportunity to take buys. before. But it's easier to see, quite honestly, on the 12-hour chart, on a higher time frame chart, because price always does pretty hard retest on the 12-hour chart before it falls. And let me see if I can find a really good one, and I'll show it to you real quick. Let me go back through and I found one. All right, perfect example. This is a really good one. So if we're looking at swing highs, right? So the pivots that I was telling you guys to add on your chart, where it showed you price, like the higher the price and lower the price, these are called swing highs and swing lows. So look right here, this swing high off 148.880, right? Then you got the next swing high that formed off 147.197. Then you got the next swing high that formed off 147.016. Those are 3 lower highs, right? Each arrow is lower than the previous arrow, right? So that's the sell pattern. That's the sell pattern, right? So what would happen is that, okay, this is what you can notice, and you can do this on the 1-hour chart. You can do it on the 15-minute chart. Doesn't matter. But notice, okay, 148.880. Then you got the next lower high, right? 147.197. What's gonna happen? You know, price is gonna drop because it put in a lower high. Price is naturally gonna drop, but then it has to form the 3rd lower high, right? It has to form the 3rd lower high in order to be basically a confirmed sell pattern where you can take a sell. So price, it's gonna basically go down to a level and retest it. So look, it tested 145 here, and it held support, right? Why? Because you got the 200 EMA down here that is basically already bounced above. It came back down into the retest, and then it came up and put in a lower high, which guaranteed you a sell. So you could have took a buy off 145, back up the retest, and you know for a fact that the major levels are always going to be tested. So if price on this particular candle, it bounced above 147.197, the next high that it forms, like lower high, is always going to probably go back 99% of the time to at least 147. So your target price, if you took a buy off 145, would be 147 for a sell. That's where you would close it out and look for sells. So hopefully that makes sense, because remember, price moves in waves, right? So they're not going to drop the price straight down, and when price is in an upturn, they're not going to shoot price straight up. So if you start noticing on a higher time frame, and if now that I showed you guys that pattern, as I zoom in and look back in time, you guys are going to see that it happens over and over, right? So price is technically, it's always going to retest. And keep in mind, this is a 12-hour chart. 12-hour chart, right? Same pattern right here. 148.462, 145.402, right? So that's green, black, green, black. You know that you're looking for a 3rd level. And remember, these are swing highs. There's also small little cells in between, right? Because we got green, black, the next green, black, we're looking for a sell. Green, black right here, we're looking for a sell, which would have worked, right? But price is always going to come back and retest. And it did right here off 144.791. See, it couldn't break 145 on this particular trade. It was weak. So, you know, you got the next sell. But when price dropped down and came back up, you know that you can hold this buy down here all the way up to at least 145. And it came pretty much to 145. So that trade alone for a buy would have been almost 10,000 pips, because you're waiting for the next lower high to form. So if we go down to the 1-hour chart, now that we know the pattern, you're going to see a ton of these, because on the lower time frame charts, it happens all the time, right? So, and I'll show you guys right now, like where it is. The only difference is, they just called again, sandals.
Why do they keep calling?
Because I guess they want to talk to me. I have to call them back. So on a 1-hour chart, basically, you're going to get a lot of these, but they're going to be for smaller pip gains because it's a lower time frame chart, right? That's why I was saying, like, the higher the time frame, the more pips you get. Perfect example right here. 133.040. You got a green black pattern. 133.004. And then you got 132.882, right? Which is telling you that you're going to get a sell. And then price came back down and retested 132. So that's like a 1,000 pip trade. But however, after the second lower high that was formed, which was off 133.004, when price dropped down, you're going to basically look for it to find support, and you're going to hold it at least. This is going to give you probably at least 500 to 800 pips every time for a buy. And look what happened. Price found support off 131.790, went up to 132.325, came back down, did a retest, and shot back up again to 132.882. So that's about 800 pips, right? Formed a black-red pattern, which is telling you that, hey, you know what? Look to the left. You see that it's the third lower high. You're looking for a sell. You could take a sell, and that trade would be about 1,000 pips. So you could have caught buys and sells. So as you get more comfortable, go back and watch the video. You'll start seeing, like, basically all you got to keep in mind is that price is always going to retest. So, and typically before a major drop, there's always going to be an uptrend that forms, a small uptrend just to fake people into that direction, meaning that you got buyers that don't really know how to read charts and price action. They're going to be thinking, oh, the market's in an uptrend, let me take a buy. When actuality, all it's doing is going up to put in a lower high and then drop lower, way lower. So hopefully that makes sense. Savage, you got any questions on that?
No, man, it's been good information, man.
Yeah, so hold on one second. Let me go back to this thing. So right now, right? Let me take this line off. And 12-hour chart. So the 5-hour chart and the 12-hour chart are money-making charts. The reason why I say that, and also the 4-hour. The reason why I say that is because the 12-hour chart, I know it sounds like it's like, oh man, it's like crazy because that's a lot of time. But the candles open, there's only 2 12-hour charts every day, right? One opens at 5 a.m. and closes at 5 p.m. The other one opens at 5 p.m. and closes at 5 a.m., right? So that's it. It's only 2 candles. But if price on the 12-hour chart is giving you a pattern, right? So think about it. Same thing right here. You got a black red. You got a black red right here. This is, meanwhile, remember, this is the 12-hour chart. And then you got the next black red here, right? Now this
Black,
is
green.
or I'm sorry, well,
Green, black.
yeah, sorry, green, black. So for sales, right? So if you're looking for sales, the thing is, you already know price is gonna do a retest. It's always gonna try to retest, right? And then it's gonna drop lower. This pattern has already confirmed that it was a sell, right? Because we got 3 lower highs. Green, black, green, black, green, black, right? That's a sell confirmation. We talked about that last week. So price is gonna basically, what is it gonna do? You know that the price action, you look for the closest level and you see how it reacts off the major level. 0.000 is stronger than any other level, right? 0.000. 0.500 is the next level that's always gonna be respected. Typically in big moves, when price is gonna put in a big move or a big drop, price is gonna change direction at the 500 level. So I'll say that again. When price is doing a big move, it's typically gonna change directions at the 500 level. And notice what I'm saying right here, right? You got 3 lower highs, black, green. I'm sorry, green, black, green, black, green, black. This candle right here came all the way down, and where did it stop? It stopped exactly at the 500 level, 0.500, right? Notice that, 0.500, and then it shot back up. This trade right here, if you'd have caught this trade off the 12-hour chart, this trade alone would have got you 1,000 pips. You would have been in the trade for 5 hours or 12 hours, but it was 1,000 pip trade just off the tap of 500. Look, when I put my cursor on it, the low of this candle was actually 133.496, almost exactly at 500. They reversed it. But remember, you were looking for sales anyway, right? Because you had the 3 lower highs. You would have took sales, right? You would have took sales off of the next candle, which the crazy thing is, the next candle opened at roughly 134.668, and it came down to 133.500. So that's about 1,000 pip trade. But what happens? Remember I told you there's always a retest. So there's always a retest, right? So as soon as you saw the big rejection on this candle, you know that the next candle, you're gonna wait for it to come down and do another retest. Your buy could have been off 134.500 because you know that the previous level that it retested was 136. And what happens? Price goes all the way back to 136. The high of this candle was like 136.344. And then it gives you the same pattern again, right? Green, black. As soon as you see the green, black, you know that you have to be out of the trade, right? So you don't want to get greedy. Your take profit would have been 136 anyway, because that's where it rejected before. So you could have took a buy off 134.500 back to 136. That's the 1,500 pip trade. As soon as this black candle closed, you know that you're back on sales, right? Look, and it perfectly respected the 200 level. So when this black candle closed, your trade would have been right off the 200 EMA, which is right above 135. Remember I told you guys before, price typically won't go 200 pips higher if it's going to reverse and go back in the direction of the trend, which in this case is sales. You could have held it all the way down. So this trade would have got you 135.247 down to 132, 2,500 pips, 2,700 pips. But notice that retest. That's what I want you guys to kind of look at. You had a retest. Basically, a retest is the banks sucking people back in, thinking that, oh my God, price is going to be in a strong uptrend. Let me hold it, right? You just have to be quick and you have to be comfortable knowing that the overall trend in this case is a downtrend because you got 3 lower highs. However, price doesn't move in a straight line. So you could have picked up 1,000 pips taking buys, and you could have picked up 2,000 pips once it started to drop. So that's 3,000 pips. And that whole trade would have happened June 15th through June 19th. So within 4 days, you would have made 3,000 pips, right? $1 lot would have been 3,000 for the week. $10 lot would have been 30,000 for the week. So just as an example, but this is the thing, right? Typically, you're going to be stronger on either buys or sells. You're going to start to notice that you make all your money off either buys or sells and not both, right? You got to really practice to be good at both. And I'm kind of giving you guys the things that I've kind of studied and all that stuff. But typically, most traders, they're going to be strong at one and not both. So you might be, hey, I talked to some of our friends that trade. They might be like, oh, I'm really good at taking sells, but I'm not good at taking buys, right? So, and that's fine. You could be good at either one. Like, to be honest, nobody said that you could catch one good trade a week. Like, whatever pattern, you need to master a couple patterns. You need to master a couple buy patterns, and you need to master a couple sell patterns, like 2 of each. As long as you do that, you're good. You could just simply wait for those patterns to occur in the market. They're going to occur, I'm telling you. At least a couple times a week, they're going to occur. And then you take only those trades. The only thing is, you just have to be disciplined enough to wait for your setups. Because what's going to happen is, if your setups haven't appeared yet, you're going to get impatient and you're going to look at things on the chart and feel like, oh, I could have made $100 here. I could have made $50 here. And then all of a sudden, you're up. You made $45, $50, or you made maybe $40, and then you're holding that trade because your trade is blue, meaning that you're making money. And then you didn't see that there was a trend line or there was a formation that formed for higher highs or higher lows. And guess what? You got sucked into the trade the same way I was saying how buyers get and sellers get sucked in, and then they move the market in the opposite direction. So now you're up $45, and then now when you close out the trade, you're down 300. That's how it happens. I've done that like a million times. So I'm just kind of trying to tell you guys and trying to prevent you from making some of the mistakes that I made. And I'm telling you, mentally, it's hard to go blue when you first start out, and meaning that you make money, but it's easy to be red because you're gonna feel like, oh, the market, this thing is rigged, and it's not rigged. Like it's actually very, very easy. It's just too easy for us because we're not used to having the ability to make a lot of money off of just looking at a chart, right? All we got to do is read a chart. We just got to read the chart right. Like our job as a trader is to read the chart right. As far as where price is, what pattern the market's giving us, and then being educated enough on the trade to actually take the right trade. That's it. That's how we get paid. We lose money when we misread the market. We make money when we read the market right. That's the reality. We don't have to go work. You don't have to clock in and go do a job in order to get paid with the market. You just got to read the chart right. That's it. So from that standpoint, but the reason why I was saying the 12-hour, even the 4-hour, right? And I'm gonna just say this. So if you're gonna trade the U.S. session, you need to look at the price action that occurred in the London session, because that's going to give you the blueprint for the U.S. session. So the London session opens at 3 a.m., right? So what if at 3 a.m., between 3 a.m. and 8 a.m., they gave you 2 lower highs? Then you know that you're waiting for the U.S. session to open, and you want to look for sells when that third lower high is formed. You want to wait for that to be formed. Now, if you didn't look at what happened in the London session, and you just open your chart at 8 a.m. and you think you see something because, like, you know what I mean, you think you see a buy, guess what? You could be buying when they've already given you 2 lower highs. So as an example, this is what I'm saying, right? So you got this pattern, this green black pattern, right? Then you got the next green black pattern, right? When you turn on your chart right here, they've given the third green black pattern. But what if you didn't notice what happened in the previous sessions, and we're just gonna make believe that this third one happened on the in the London session, right? We're gonna act like this happened in the London session, and that this candle is the 8 o'clock candle that opened in the U.S. session, right? And you're thinking like, oh man, price already bounced off 137,500 right here. I'm about to take buys. You're not gonna take buys because you're gonna lose your money, because they just gave you 3 lower highs telling you that it's time for sells. But you didn't look at the price action in the previous session, you wouldn't know that. Because you're gonna be like, oh man, Demario said off 137,500, you normally get a reaction. But the thing is that they've already given you the blueprint. In this particular session, you would be, after this candle closes, you're looking for sells, because they gave you 3 lower highs. And then, you know, if you would have took sells, guess what? You would have made 1,000 pips, right? You would have made 1,000 pips. If you took buys, they would have made you feel good for probably 5 minutes, because you got in off 500, or like you got in at 137.585, and price went up to 137.665 area, right? So you were up like, oh, I'm up 70 pips. I'm gonna hold it. And then what happens? You lost 1,000 pips. So that's what I'm saying. It's very important to look at the previous session. So if you're trading the Asian session, you want to look at what happened in the US session throughout the day and see if there's a pattern that formed either for buys or sells, right? Remember, we're talking about buys today. It would be the same pattern. The only difference is it would be three higher lows. So it would be something like this, right? So let's find 3 higher lows real quick, and then to show you guys. And actually, I can see it right here. Just not going to give you the swing high. But you got 1, 2 right here, and then you got 3, right? Because price didn't go. These are, see, three higher lows. So once that pattern forms, you know in your session, you're looking for buys, right? And then what happened? Perfect example. This is actually a good example, a random example, is that you got the three lower highs, so you know you're looking for buys. Notice how 131,790 is perfectly respected. You got a pin bar here that told you that it's going higher, bullish pin bar, right? You could have took that. You could have took that trade after the pin bar, or you could wait. Notice this candle closed at 5 a.m., which is in the middle of the London session, right? So at 5 a.m., when there's more volume in the market because it's a London session, price, and you guys got to look at this because this is a good example, price shot all the way up. And it even continued during the US session. Notice that, right? Price shot up because you had three higher highs, or I'm sorry, 3 lower highs, or 3 higher lows. I'm sorry, 3 higher lows. One, you got 1 here, 129.328, 130.679, and then you got it off this level here. Price shot up. Let's find the 9 a.m. candle. 9 a.m. candle is right here, right? Which means that at 9 o'clock, say you turn on your computer at 8 o'clock in the morning, you got to be able to read this pattern. You got to be able to see that it put in three higher lows, and you're looking for buys, not sells, right? You read the pattern correct. It's 8 o'clock or 9 o'clock. You take a buy, you're in the money. If you took a sell, you're going to lose money, right? Because price shot from basically at 9 o'clock, 132,500. Look, this thing went all the way up to 139,742. So you're talking, that's a 7,000 pip trade if you would have held it. So you're going to be on the sidelines disappointed if you missed that trade and you took sells because you didn't read the pattern and you didn't see that in the previous session. It basically formed, previous sessions, it formed three higher lows. So that's why it's very important. And I'm telling you guys, honestly, it took me a while I thought I could just look at the chart and read a little bit of price action, without looking left and all that. You got to look left. On the higher time frames, looking left can make you a lot of money, right? Look right here, perfect example. We're talking about buys. So price came down to 131,912, right? This was on April 21st, on April 29th. So we're talking 8 days later, it came right back down to the level. It bounced from this level before. This is a 12-hour chart. It's probably going to bounce again. So if you see it, you're going to take a buy. Took a buy off 132. This thing went all the way up to 135,500, 3,500 pips. Just because you read price action and you saw that the last time it was at this level, it bounced, right, for a buy. And if you go through the chart, you're going to see that over and over. The good thing for us is that the market always repeats itself. Notice, look, right here, perfect example. And it might take a while on a higher time frame, but it still works. Price came down on August 11th to 126,554, right off the 500 level, right? In August of 2019, came back September 2nd of 2019, pretty much close to the same level, about 100 pips different. And then what happened again? It bounced here. It bounced here again. Same thing, right? So a lot of times the market's going to give you clues. You just have to be patient and wait. Now, here's the thing. On the flip side of that, you're going to look for patterns that tell you it's a sell. And if you notice, here's the sell again, right? Green, black, green, black, green, black. Three lower highs, right? Where's your target price? This is a 12-hour chart, so this is a long-term chart. Your target price is the previous area that it rejected on the swing low, which was 126,554. So think about it. You're getting in on this candle off 129,857. and you're gonna hold it until it comes back down closer to the previous area where it dropped, where it popped from, right? Where it shot up from. That's a 3,000 pip trade. Just on the sell side. Then you're gonna take buys, and what happens? 126, 675, all the way up to 135. That's almost 10,000 pips. So you could have caught 3,000 pips down and almost 10,000 pips on buys going back the other direction, just by reading the price action. So hopefully that makes sense. Does anybody have any questions on anything at all? Obviously, I'm gonna post these on YouTube too.
Nah.
No questions from me.
Yeah, it's a good information, man. Real good information.
Yeah, man. You just got to. All it is, you guys just got to be able to spot, the pattern. And even right here, even for these buys, like I was saying, you got to know that price is gonna bounce from this level. You got the black green rotate pattern right here. See, look, black green. Then you got another black green right here. If you wanted to wait to be sure that pattern is forming, look, black green. That's 3. So once you see the third one, right, third pattern, you know that you're on the next candle coming down to test this area, you're going to take buys. Even on this candle right here, it came back down and retested 127,790, and then it shot up. But notice how the pattern keeps going, right? Look, on the uptrend. Black, green, right? And then you gotta the next pattern that forms. Price does patterns all the time, right? All you gotta do is be able to read it. Look, right here, same thing. Black, green. Black, green. Price shot up, came back down, did a retest. Black, green, right? So in the next candle, you're looking for buys, and that would have been off 136,500. Price never broke 500, shot up. Oh, you missed that one. Black, green, right? So in the next candle, retest, looking for buys. So that's basically how the market moves. Now it's gonna either move like that or it's gonna be consolidation after a big move, right? So which you don't want to trade anyway. And consolidation is basically when price is stuck in the area with little movement. Typically that happens in low volume times, like the agent session. That's where price is basically moving sideways. So if you notice, this is consolidation right here. This is what I'm talking about. Notice how price really didn't go anywhere right here. It kind of stayed in the same range going up and down, and then it broke out, came back, consolidated again right here, and then finally went higher. So this time right here, just like I was saying, right? This is the 1 hour chart from 12 o'clock noon to and then it kind of played around basically to the agent session. So you're talking maybe 8 or 9 hours, and then it finally got some volume, shot back down. Look, doing it again around the same time, and then it shot back up when the London session. So typically, that's why I was saying you don't have to feel like you got to take a trade when the market opens. Even for the London session, if you're going to trade the London session, if you don't see anything clear at 3 o'clock in the morning, you can wait till 5 a.m. when the 4 o'clock candle opens. When the new candle opens, when that new candle opens, then you can start looking for a trade. And also you got to remember the 5 hour candle. So the 5 hour candle, if you notice the open time on the 5 hour candle, one opens at 8 a.m., which is perfect because if you've already got 2 lower highs, right? You're looking for the next lower high for a sell. Maybe you'll get it on that candle. I'm not sure, but you just got to watch the price action. One opens at 8 a.m., one opens at 3 a.m. That's why I was saying the 5 hour chart is important, because there's a new 5 hour candle that opens exactly at 3 a.m., which is when the London session opens, right? It matches that time. It's perfect. Then at 8 o'clock, the next 5 hour candle opens, which matches the U.S. open time, which is perfect. So you don't have to feel like you have to take a trade right at 8 o'clock. Like that might not be the case. And then the crazy thing is at 1 o'clock, right? At 1 o'clock, the next 5-hour candle opens. So which actually matches when the 4-hour candle opens, right? So you can kind of use those patterns. So, but hopefully this webinar helped you guys as far as when to look for sells, or I'm sorry, when to look for buys and sells actually, because I showed you guys both. But that's what I'm like starting to do now, and I'm kind of going through and like, because I know that I'm waiting for a retest. So when you practice this a little bit, you guys will start seeing like you can actually take trades up to the levels where you know it's going to retest, and then you take buys if you're looking for buys. So and the vice versa. So if you're looking for sells, you can take buys up to the level you know that that price is going to typically reject. You can even put in sell orders or buy orders and put it maybe 100 pips below where you think price is going to go based off of your analysis. You know what I mean? So like, cause I'm telling you guys, I was in a trade, it's probably like 3 weeks ago, where I got to sell for like 500 pips, but I also could have made 500 pips on a buy going back to that level. But it didn't click until after I closed out the trade. I was like, man, I knew it was going to come up here and retest. I should have just took buys. Because, and you guys will start seeing it. And as we go through these webinars, I'll start pointing it out because it happens like every week. It's the same patterns every week. That's the good thing. The market repeats itself over and over. The only thing that's going to hurt you in the market is yourself, to be honest. It's either going to be you got in the trade too early. You didn't wait for the pattern to set up. You got pissed off because you lost money on the trade because you read the chart wrong, or you saw price bouncing and you close out your buy early. So now you want to chase the price. And as soon as you get in, price is going to start dropping. I'm telling you, it happens every time. As soon as you miss a trade, you're going to try to trace. You can't chase it because I'm telling you, it's gonna reverse. And then you're gonna be sitting there kind of like, oh man, this thing is crazy. But that's how it works. That's exactly how it works. Yeah, I got my big trend line there. So if I go to the monthly chart actually, last month was a weak chart. Like it was basically an indecision chart. So we'll have to kind of see what happens. As far as last week, look, you can see my channel perfect, right? Remember I was telling you guys about the channel that I got going on? Look at the trend line at the top and the trend line at the bottom. You can see how price is staying within this trend line. And this is a month, this is the weekly, right? So price could technically, it's gonna take some time, right? Because this is a weekly chart, every candle's a week. But I know that once price goes to the upside of this, I'm looking for sells to ride back down, which could be potentially like a 8,000 to 9,000 pip trade for sells, right? And then right off the trend line, you know, price, you can technically probably hold it to the upside of it, which would be about 10,000 pips. But that's swing trading. So you would have to hold it. You could be in that trade for 2 months. It just depends on what's going on. But for 10,000 pips. But all right, but this one's gonna run out. I'll catch you guys on the flip side. I'll definitely post it on YouTube, and I'll catch you guys. I'll talk to you guys later.
All right, D. Appreciate that.
All right, man. Take it easy, man.
Thank you. Love you.
All right, man.
Yeah, appreciate it, man.
All right, man. I'll see you.